Well, hello everyone, and good afternoon. My name is Erik Schreiner, and welcome back to Commodity Intersections. I want to talk about corn here first today because there are a lot of exciting things forming, at least from a technical perspective. And Darren briefly went over this on today's Before the Bell, where we're basically looking for some key technical levels to give way to really locking a low in place in this market. So let's go ahead and start with December corn on the daily chart level with our candlestick patterns before we move on to all three classes of wheat and rough rice. And the first thing I'd like to draw your attention to, and this is something that if you've been following along with commodity intersections over the course of this week, or at least before the bell, you'll know that this is a three white soldiers continuation pattern. This is basically the pattern that we were looking to form in the coffee market that failed to do so in yesterday's trade. And what this essentially says is we have one small body followed by a larger real body and then a third subsequently larger real body over the course of a 3-day period. And this is, again, going to bode well for higher prices in the corn market. Now, I would have liked to see a shaven top close on today's action, but we did close within, say, the top range of the bar, so that looks good here for higher prices moving forward. And let's go ahead now and take a look at our operative L8 wave script versus what we discussed in yesterday's market update and kind of look at what potentially has changed, if anything at all. All right, let's take a look at this market. And if you recall from yesterday, we were working the possibility of one more new low to round out blue wave 2 here, potentially targeting around that 408 and a quarter level before ultimately bottoming out. But I also mentioned that there was the possibility that that low is already in place, given that strength that we observed in yesterday's trade. Well, given the follow through that we've seen today, I think it's safe to assume that that low is indeed in place, and we are going to call this blue wave 2 complete down at 409 and a quarter, and this is the level for critical support that needs to hold in place to lock this low and keep this operative L8 wave script alive. Now, the next thing I'd like to draw your attention to is the technical reversal signature that we have over the course of the last couple of weeks of trade here, and that is the wave of equal weight in the opposing direction. This is a reversal signature, so this bodes well again for higher prices in the corn market. And if we are going to continue looking higher for this red wave 1 advance, well, we potentially have a couple more cents of left upside, though it remains to be seen. We'll have to observe what tomorrow has in store, or we could have already topped out for this red wave 1 at current levels, at which point we'll be looking for a red wave 2 correction before ultimately proceeding higher in our 5-wave move of 3, and that can be readily observed here on our daily chart level. So ideally, corn has bottomed out. We're going to see a little bit more strength here for red wave 1, then a pullback, and then some follow through with blue wave 3, targeting around that 450 to 460 level. We'll have to see what happens when the time comes, when the price action starts to unfold in that direction, and ideally it's going to do so fairly soon.